Money makes the world move, but banking makes money move. Behind every empire, every revolution, and every skyscraper stands one of history's quietest inventions: the bank. To understand how our global economy came to be, we have to travel thousands of years back to the dawn of civilization itself. The story begins around 2000 BCE in Mesopotamia, where the earliest farmers and traders used clay tablets to record grain deposits and debts. Temples acted as safe houses, storing gold, silver, and barley, and priests doubled as the world's first bankers. They issued loans for trade caravans and collected interest in crops or livestock. It was primitive banking, but the idea had been born: money could work even when it wasn't moving. As trade expanded, so did the need for organized finance. By ancient Greece and Rome, private lenders and money changers emerged. They exchanged coins, financed voyages, and kept ledgers, the foundation of double-entry bookkeeping. In Athens, the trapezitae, or bench money changers, worked from marble tables in the Agra, giving us the very word bank, from the Italian banca, meaning bench. When the Roman Empire fell, Europe's economy collapsed, and for centuries, banking nearly disappeared. But in the Middle Ages, it made a comeback, this time through trade fairs and merchant families. In Italy, cities like Venice, Genoa, and Florence became financial hubs. The Medici family, in the 5th–10th century, built one of history's most powerful banking dynasties. They introduced double-entry accounting, foreign exchange networks, and letters of credit that allowed merchants to travel safely without carrying gold. The Medici Bank's innovations laid the foundation for modern financial systems. As the Renaissance spread, banking evolved with it. In 1609, the Bank of Amsterdam became the first true public bank, stabilizing currency and issuing notes backed by precious metals. Soon after, in 1694, England established the Bank of England, born out of necessity to fund wars and manage national debt. This was revolutionary, a bank lending to a government in exchange for interest, the beginning of central banking. By the 18th and 19th centuries, as industrialization exploded, banks fueled the modern world. They financed factories, railways, and empires. Banks like Rothschild, Barclays, and J.P. Morgan became household names, symbolizing the growing power of global finance. Paper money replaced coins, and the trust in a bank's promise became as valuable as gold itself. In the 20th century, banking went digital, first with telegraph transfers, then credit cards, ATMs, and electronic banking. After the Great Depression of the 1930s, regulations tightened, but new institutions like the World Bank and the International Monetary Fund emerged to stabilize economies and rebuild nations after World War II. By the late 20th century, globalization and computers transformed everything again. Online transactions, stock exchanges, and mobile banking blurred national borders. Today, digital wallets, cryptocurrency, and fintech startups are redefining what banking means, not just as a financial tool, but as a global digital ecosystem. Yet, the essence of banking remains the same as it was in ancient Mesopotamia: trust, record-keeping, and the ability to move value across time and space. Whether it's a clay tablet or a blockchain ledger, every era of banking has been built on the same foundation: the promise that your money will be safe and your future secure. From temples of gold to apps on our phones, banking is the invisible engine that drives civilization forward. And as history shows, whenever money evolves, so does humanity. If you enjoy exploring how ancient ideas shape our modern world, like, subscribe, and share, because the story of money is the story of us all.